Alright, let me know if I'm back. Problems of live streaming while trading. I think it's on YouTube's end because my internet's fine. I don't know. I'm trying not to pay too much attention to this live stream. I'm trying to do my best to just trade. So if you guys can hear me, that's great. I mean, make sure to re-like the video. It's slightly frustrating, but it is what it is. Alright, now we're on good stream status. So let's hope and pray that we have good stream status the rest of the hour here, so I don't have to deal with this. Otherwise, I'm just going to stop the stream. If I keep running errors, I'm going to stop the stream, and that's it. So. If you see me not talking, it's because I'm trying to monitor what is going on with this stream, because I'm not sure why I keep saying poor. The internet's fine, I just tested it, so. And I see this here, so I don't. Thank you, brother, for that. I don't even know if you guys can hear me. I'm really trying not to get irritated by this. I'm not even irritated about market. I get more frustrated with this streaming technical stuff than I do with the markets. If you guys are still here and you can hear me, I'm still waiting for time because I don't particularly have a bias right now, because I can see both sides. I could see where we could displace higher out of here. I could also see where we could drop off lower and take out the sell side liquidity. So we'll have to see. If the stream's health maintains as is, then Yeah, it seems like everything's good now. Just make sure to re-like the video. I know it's a little technical difficulties today, but I appreciate y'all sticking through it. And I'm also not changing time frames a lot because I don't want anything to start buffering. As funny as that sounds. I don't know, like, if I went to like Telegram or Discord and I streamed, I guarantee it would be so much more smooth and easier. YouTube is so difficult sometimes. So it seems like everything's good. I can start kind of talking again. It's the reason why I'm not talking, because I don't want to be cut off and have to repeat things. We're sitting inside of this inefficiency in here on the 1 minute. So I see both sides of the board. I could see where we could easily displace higher out of this inefficiency in here and off of this inversion. I could also see how we could drop off lower and run for the sell side. So what I'm doing is I'm just waiting for time. That's the reason why I like waiting for the silver bullet, is because it can weed out a lot of confusion and kind of anxiety about where price should go to. For me, if I just wait for enough time, then it should clear up what I should be looking for. Yeah, I wish they wouldn't, Chris. If you're just tuning in again, if you can just re-like the video, I'd appreciate it. So this new day opening gap down here, it's really what I was trying to get to before all this stuff happened, was that new day opening gap could be a really nice draw on liquidity if we drop off lower in here. You can see we utilize that as support to displace higher, gravitate above this inversion. Now, I have on this chart here, this last down close candle is your bearish breaker. So extend that out in time. We're inside of a premium reacting off of that bearish breaker. So I'm just curious to see what really unfolds on the silver bullet. I'm not trying to guess. To my older self, this is what I would be doing. I'd be trying to force one way or the other right now, instead of just waiting for enough information. Because I could easily sell short in here and be positioned for shorts. I could also be looking for longs and be positioning myself in longs. So for me, I'm just waiting for enough evidence. If this thing drops off lower and we start breaking through bullish PD arrays, then it's clearly bearish. If we start displacing higher, we start breaking above the SIBI in here, treating it as support, then I know that we're probably bullish for the day. So I'm just waiting for time. That's why time is the number one most important factor inside of these concepts, is because it's going to help you figure out what you should be doing. Yes, DG, that's, for the most part, I usually have whatever time frame I'm on, I only have it visible on that time frame. On this instance, on the 1 minute, these lines are from the 5 minute. So that's just because I like to have a clear chart. I don't like to have a bunch of annotations running all over my chart. It's just too much confusion. So if you look at the 5 minute in here, see that inversion? Look at where the bodies are respecting price. And we're digging into that fair value gap in here. So just looking at the dealing range from this low up to this high, we haven't yet gone into a discount. We don't necessarily need to, but what I'm favoring, and a gun to my head, I favor sell side. That's just what I'm doing right now. But there isn't a gun to my head, so I don't have to force anything. I don't have to take a trade just because I elect to believe that. I need enough evidence, personally. I need enough evidence to see that it's wanting to gravitate towards the relative equal lows in here. Again, the RTH gap, we may want to fully close in that RTH gap. If you're just joining, please re-like the video. I would really appreciate it. So we were up to like 100 something likes, now we're down to 91. So I'm gonna go down to a 1 minute in here. And same thing, even that inversion, if we break underneath it, you can see we can utilize that as basically like a ceiling resistance. If we look at YM is making a new high while NQ is dropping off lower, and ES is still not made a higher high or a lower low in here. It's kind of in the middle. So that is a bearish SMT and confluence. We're moving into the silver bullet hour. Alright, so I'm looking at this higher time frame going, alright, well, we moved up into a premium, into this fair value gap here. If we drop beneath, we've already dropped beneath this one, so that's going to be treated as an inversion. We're about 2 minutes until the silver bullet. Small fair value gap in here, but I'd rather wait for a little bit more clarity there. Yeah, so a lot of you are annotating the same idea that YM is moving higher, well, ES is stagnant, and NQ is moving off lower. So it's a bit decoupled. I haven't got a chance to look at dollar index because I'm on one monitor. I'm trying to monitor the stream status and see where we're at. But I don't see it as much used today. So if we have a nice displacement drop lower underneath this for value gap in here, we could treat that as inversion. Yeah, we're inside about 50% of the RTH gap. If this thing really wants to sell off today, it'll close in that entire RTH. going to try to close out all my other tabs, see if that helps. And you see me not talking, it's because it says poor connection, so it's probably buffering and I'm not going to explain stuff. So I want to see if we can see a rejection away from the Sibian here, and if we drop off lower. And if we do, then I would be looking for at least a new day opening gap on the sell side in here. Alright, so we're seeing a displacement, a drop off lower in here. So I'm going to mark out the kind of CE of this wick in here. A lot of technical difficulties today, man. I do apologize, but sometimes you can't control things. And it is what it is. So there's nothing in there for me to even go short. That's the reason why I didn't take anything. I mean, we dropped beneath that fair value gap, but it's really nothing super crucial right now. Let me know if you guys are still there. I want to see how far away the latency is and delay. Still here. Okay. I'm not doing anything just yet. I don't see anything to short just yet. All right. I appreciate you guys. All right. Let's just cross our fingers and hope the stream is good from here on out. But I've said that already. It just keeps going back to poor. The reason I'm not trying to really push these shorts is A, there just wasn't anything in there for me to go short, and I'm really being weary of the narrative, which is bullish, right? The higher time frame perspective. So just because there is sell side, just because we dropped off lower, doesn't automatically call for us to just short right away. I haven't been able to do this, but it seems like the stream is good now, where I can start going out to these higher time frames and getting perspective. If you're ever in a session, make sure to go out to the higher time frames like periodically and just remind yourself of what's going on, because sometimes you can get stuck on a 1 minute, on a 5 minute, and you get so laser focused that you forget about these higher time frames. It's the reason why I have the daily candlestick on. Sometimes I have the 1 hour on here, is because I try not to lose sight of the higher time frames. Because for me, the higher time frame is extremely bullish, and I'm not trying to counter this right now. Romer, yeah, I mean, if you're ever in that predicament, it's like you don't have to force anything. There's no gun to your head. There's no rush. If you can't clearly make a case for one side, then you should just wait. I just skipped a bunch of ads because you guys have already been through enough today. So let's say this thing really starts tearing off higher, because if you look at ES, you look at YM, they're really not, to me, they don't look like they want to drop off lower. So NQ may have just dropped off lower into a deep discount, and it may want to rip off higher again. And we're still inside of that 15-minute BISI. We're still inside of the 5-minute fair value gap in here as well. So there's just nothing clear to me to make a hardline decision whether we're going higher or lower currently. Because in here we dropped down into a discount. Remember, I drew that dealing range and we weren't yet at discount. Now we dropped down into the discount, basically optimal trade entry. But we could be seeking the buy side liquidity pool before the open. Thank you, Romer. I appreciate it. Yeah, if everybody can just like the video if you haven't. Get it back to where it was. Alright, so if you look at YM, look at ES, they both are making new highs. And Q starting to move alongside them. So I'm just curious to see what we really want to do here today. This is where sitting on your hands sometimes can pay you. Because if I made a decision here to short or short in here, I mean, it would have been a little premature. So we get above. If there's something in here for me to go long, I'm going to be willing to go long. But if we get above this high, then I'm looking for this inefficiency to be filled in again, and then this inefficiency in the premium. If anything, there was a bullish S&T because NQ made a lower low. Oh boy, the stream's back to poor health. Well, Just got to deal with it. Yes, I see the bullish breaker, but seems like we're pretty manipulated up in here. So that would be bullish breaker. You have a low, a high, a lower low, then a higher high. I particularly wouldn't want to go along off of that. It's just personally me. I haven't done this, but let me look at dollar index. So I haven't done that. Paying too much attention to this stream. So dollar index is moving a little bit higher in here. And if dollar index wants to move higher, I'm not completely sold on trying to long NQ, but we'll see. It's kind of just range bounce. I don't really trust whatever dollar's doing. Indicator, Roderick. Man, I gotta make like an FA, like a frequently asked questions thing, and I'm just gonna drop it every time. There's nothing against you, Roderick, but I think I get that question, I believe, I'm not kidding, 50 times a day. It's this one here. So a lot of buy side being built up in here. DXY is dollar index. That's a good idea, not a sheep. So that's a really nice closure on the 5 minute, in my opinion. So we'd be looking at this high here. If it forms a fair value gap when it drops down into it, could be willing to go long, bullish order block. I want to see how this really closes. So I'm going to go long in here off of that fair value gap. Stop loss beneath the order block in there. We'll see if we want to get above the high. I just want to see how far, if it truly did want to expand higher today. The reason I'm not talking is because it still says poor. I'm not trying to be interrupted with lag or buffering. So that mean threshold of it, I'd like for it to displace away obviously from this fair value gap, but mean threshold at an order block is really the last point of interest. Yeah, I mean, with dollar index, sometimes it can move alongside it. I mean, I'm not a fan that it is moving in the same direction, but at times where dollar index in the overall macro perspective, it's still inside of consolidation. So to me, it doesn't have that much influence over my idea of what I'm looking for. So if we get above this high here, I'm going to be taking out at least 2 contracts and possibly moving to break even. If we close above this, which it looks like we are, then we can now treat that as an inversion level. And from here, I'd really need it to at least utilize the premium end of the inversion and get up into the buy side liquidity. So NQ, ES, they're all moving in sync, which is nice. It's a good confluence. You see dollar index is starting to drop off a little bit lower in here. So you'll sell 2 contracts there. I sold 2 on my live account. And then we'll see how far this thing wants to reach for today. At this point, you can reduce your risk to even underneath the inversion, or it stops at break even, whatever you prefer. Because it may want to come back down and utilize that inversion as a kind of a bullish PD rate to move higher again. So I don't want to choke the stop loss super short. But at the same time, we could be taking out buy side. So that's the reason why I'm taking partials, protecting myself. I really want to just see it continue higher. If you're looking to the left of us, we're sitting inside of that inefficiency, which is that gray box. So I want to see it move past it, above it, to it, and through it, as ICT would say. And if that's all you're looking for, let's say you're just looking for 20 handles, 25 handles, I mean, you got it right there. And that's all you could really need in a session. But I'm just going to see if we can get a little bit more expansion out of today. Just depending. If I see this thing starting to drop off lower in here, I'm not going to like that. I really want to see it push higher and get above this SIBI in here. Because I don't particularly like that. So it's whatever you prefer. If you want to put your stops to break even, but I'm going to leave mine like this because it may come back down into the inversion and utilize it to move higher again. So we'll just have to see. Yeah, I entered off the second stage. It's technically a market maker buy model. So the reason why I don't preach market maker buy or sell models because I could see that entry pattern without even seeing it's a market maker buy or sell model. I didn't even see it until you mentioned it to me. That's the reason why I don't preach it. I think people use it as a buzzword and try to sound smart, when in reality they have no idea what they're even doing. So I don't like particularly that. Doesn't mean that the trade idea is invalid, but I don't want to see a huge displacement or drop off lower. Like it needs to really utilize this premium end of the inversion to move higher. That's the reason why we take partials and reduce our risk, because I don't know for 100% guarantee what price is going to do. If I wanted to get some standard deviations, I could pull from this entire, I know the chart is a little cluttered, but I can pull from that entire inverse swing to try to figure out where I should be really looking for. So If it really wants to move higher today, I could pull a partial all the way up there. But why I'm starting to drop off a little lower in here. Nothing's telling me to completely abandon the idea just yet. Wow, how do we get to 451? Well, welcome for all those who are new. Appreciate you tuning in. Make sure to like the video, subscribe. It's the only thing I really ask. It's like when I put on a position, a bunch of viewers come in, which is pretty fascinating. So do you see the time it's spending in here? Time is a huge factor in your trade. You want to see if it's spending too much time in an opposing PD array. It's not particularly a good sign. That doesn't mean to automatically kill the trade, but you want to see price move away from inefficiencies, especially opposing ones if you're in a trade, and quickly move to and through them and utilize them as support. Mods, yeah, I see that, but as I explained, I mean, DXY is inside of a higher time frame consolidation. So anytime you're inside a consolidation, it can look like it's moving higher, and then at 1 second it will drop off lower. And in general, if DXY is consolidating, index futures are allowed to move higher or lower. They're allowed to be freely moved. So sometimes dollar index is not a good confluence. I disregard it. I don't use it. And then at times I do utilize it, depending on the conditions. So I'm just holding on to the trade idea because nothing's telling me to just can the idea. Sometimes you have to sit through a little bit of heat, and this is where experience comes in and just allowing the trade to do its thing. I'm paying my stop loss, I'm paying my position to do its job. So if we get above this high here, I'd probably take out another partial, and then I'd be taking out a partial above right at that premium SIBI. From here, because of how much time we spent and we moved away, I would honestly move my stops to break even. Because at this point in time, if we came back down into it, it wouldn't be a great sign. I really need from here just for it to gravitate higher. I don't want to see any more time being spent in here. So I'm going to pull off another partial. Anytime you get above a buy side liquidity pool, it's a good point to take out another partial. You can see I took another one on my live. So partials have taken, 90% of the position is off, my stops are moved to break even. I'm completely stress free, and we're just going to chill out, right? And see if I can wait for this expansion higher or lower. And just so we're transparent here, this is on my live account. Position was in here. I had 4 contracts, the same. It's just on micros compared to NQ. I just do the paper trading so you all can see where I'm putting my stuff at. Gary? Oh, that's awesome. Appreciate Tanya. I don't know if you're listening, but I appreciate you. You're doing great out there. I always recommend people to you as well. I mean, you're killing it. Yeah, Mats, I'm pretty sure you're the guy that I know who you are. But as a newer trader, yeah, I think paying attention to dollar index can sometimes confuse you. I think intermarket relationships can add more confusion at times, even though I'm very heavy advocate of it. I think if you just pay attention to your model and time, it's going to really help you. What are we targeting, brother? Well, if I'm pulling off the last partial, I'd be looking for this inefficiency, particularly in here if we can get above it, and then this inefficiency up here. So on the 1 minute time frame, I have it. So this inefficiency is that gray box, fair value gap, and then this one that we're sitting inside of is a CIBI, right? So you see where price is. Look at the 1 minute. So I'm seeing if we can get above this, to and through it, treat it as an inversion support, and then gravitate higher into that premium CIBI up there. And that would be ultimately what I'm looking for. And if you look at just in terms of standard deviations, if you look at this inverse swing here, you can look at negative 0.5 standard deviations lines up with that inefficiency. So that's what I'm looking for. 90% of my position's off. So I'm not worrying whether or not price is going to come back on me, if it stops me on a break even. I mean, who cares? I've done the work here. I've taken out my partials. And ICT used to say this a lot. He doesn't as much, but pay the trader. That's what rings in my head all the time, is Michael's voice of constantly telling me, pay the trader, pay the trader. And that's not out of fear. That's not out of, me FOMOing out of the position. That's just me taking partials and paying myself at a logical level. Yeah, if everybody can like the video and subscribe, I'd appreciate it. For all the people who are new here, I appreciate everybody tuning in. Why don't I trade ES? Or why didn't I trade ES? Just because I was focusing more on NQ today. Yesterday I traded ES, but most of the time I do not trade ES. I just like NQ. So you can see here, I'm not mad or upset. I'm happy that I pulled off partials. I protected myself. If we run to break even, then all right, I did exactly what I was supposed to do. I followed my system and my plan. So that's me getting stopped out of break even. But guess what? I took out 90% of the position. So from here, even if this thing gravitated higher and it ran higher, it is what it is. I paid myself. I did what I was supposed to do. I got my money. There's going to be times where you have your stop loss to break even. It just nicks you at break even and then it rallies. Does that mean I should get back into the position? No. The whole point of trading is to do as little work as possible, get your money, get out, and be done for the day. Because if you're trying to constantly be inside of these markets, you're constantly spending mental capital tokens. That's going to be my last trade of the week because I'm up on the week. I've already taken, I believe, close to 5, maybe I think 6 trades this week, which is a little too much for me, even my liking. But I've had a couple days where I've taken a loss and then had to get back. I didn't have to, but I got back in the market to at least recover that loss. So if you're new here, I'm always preaching about psychology. I'm always preaching about your mental capital and how you should be paying attention to that. Because that's the number one most important thing as a trader is every time you enter into a trade, every time you engage with the market, you're spending a mental capital token. And the reason why I'm even stating this is my last trade of the week is because I know moving into a Friday, I'm a little bit more fatigued. And this is what happened last Friday is I was not zoned in. I wasn't on part. I mismanaged a trade where it should have been profitable. And I know myself very well through journaling and through experience that by the time the week ends, I should probably dial it back because I'm not dialed in. I'm fatigued. You know, if you're working out all week, your body's sore, you're mentally spent from the week from trading. So hopefully that makes sense. I know I can go on a tangent sometimes, so catch me. In terms of what we're doing now, it's the reason why I was pulling off partials and protecting myself is because if we were to run above buy-side liquidity and drop off lower in here, could we revisit the sell-side liquidity? And that's really what I was weary of today. and I was seeing both sides of the board, and I was waiting for confirmation. If I was clearly bullish and the sell side's already been ran, we displaced higher in here, I would have elected to go long down here, and I could have pulled a lot better position. But for me, in a second stage distribution, because this is a market maker buy model, it's a little bit higher probability entry, because I already know that, well, 75% of this model is complete, and I'm just looking for that last 25 extension above the original consolidation. Not that you even need to know that that there's a market maker buy or sell model, because to me, that can confuse people. You can be subjective to a market maker sell or buy model. If you just simply focus on the drawn liquidity, you focus on even SMT, the second stage or even a stage of a market maker sell or buy model is going to appear. Because most of the time it's a 2022 model, or it's simply just a fair value gap targeting a drawn liquidity. And here I didn't even know it was a market maker buy model until somebody told me. So for those who ask about market maker sell or buy models, I'm very keen on just focusing on a specific pattern and characteristic that repeat in the market, and it's easy for you to see, because and something that's not super subjective. I think market maker sell or buy models are super subjective. Unless I can clearly see it and it's super easy and it aligns with my drawn liquidity, then I will outline it. Tom, thank you. Thank you everybody in here who's new. I'm just looking at the chat now. Yeah, am I getting to 6K or not? If you guys can subscribe, I think I'm close to 6K or something close to that. I appreciate it. And if we could break 500 viewers, that would be a new record. If I wasn't live streaming, right, I'm just going to be completely real. If I wasn't live streaming, I'd be done for the day. I'd turn off the computer. There's no reason for me to get back into these markets. And I know a lot of people are in here probably trying to figure out what I'm thinking. I don't have an opinion right now. Currently, I don't see anything that would be even fruitful. I'd need to wait for more evidence. And B, if you've already taken a trade and it was profitable, just close the computer. Be done for the day. I've talked about this in terms of psychology. If you take a trade and then you feel the inclination to take another one, you are not satisfied, you're not content with the profits that you've had. And you need to figure out why that is. You need to figure out what the root cause is as to why you don't feel like those profits are enough. Most of the time, a lot of you are doing challenges and you feel as if that, that's not enough for you and you didn't do enough. Just doing a small scalp like that is enough. That can pay your bills. That can add up over time. So if you have a greed problem, figure out why things are not, content enough. Can you break down your trade? I mean, if you go back to a live stream, you can see it in real time. What is my motivation? Why are you doing this? Well, particularly it's to help people. And at a later point in time, there probably will be some type of mentorship that I will charge money for. Just being completely brutally honest. But if I'm showing you live every single day, every single week, how I trade transparently, you guys can make the decision whether I'm a good trader or not, or whether or not you want to invest into myself. And I mean, if I'm out here giving away free trades, I'm basically giving away free money. So in a way, it's also paying me back, because I don't have to sit here and do this for free. I can immediately just start charging for this. So that's the way I view it. Good advice. Long-term emotional buildup has been hurting me. Yeah, and that's, you have to go through your journal and figure out what's been building up and try to discharge that as much as possible. I feel like I have to pass my evaluation in one day, closing my competition. Yeah, exactly. Trust me, I've gone through a lot of challenges and I've failed a lot of them, and I understand the pressure that you feel. They're meant to put a lot of psychological pressure on you for a particular reason. And once you move into a live account, if you've never traded a live account and you just jump into these challenges, it's a whole different game. Because I think challenges are harder than a live account, because we the live account, I have no pressure to take a trade. I have no pressure to try to force things because I have time. I have, you know, I don't have to do anything. I don't have to complete a challenge. It's already done. So if you haven't practiced on a live account, whether that's, you know, $1,000 or $500, whatever it may be, whatever you can, you know, pull together, and just practice on a live account or a demo, and then go into a challenge. Rista, appreciate you, brother. I really do. I appreciate the real ones who are in here every single day, even yesterday. I really do appreciate you guys. I know you guys are the ones that are really seeking knowledge. You're the ones that really want to improve yourselves. So in terms of what's just happening in price, there's a lot of people in the chat. Again, be careful what you ask for, you pray for, because, I mean, there's a lot of questions. I'm not going to be able to get to all of these, and if I want to focus on price, it's a little much. So just doing an overview of what's happening currently. Let's look at the higher time frames in here. So we're resting inside of this premium fair value gap. Looking at the 4 hour as well. I annotate in the morning to mark out kind of this wick. So you can split that into 3 sections. Discount, CE, and then the premium. So it's the same thing with the daily wick. And I believe, possibly, we'll see today how everything unfolds. We could run above the high, but I'm annotating particularly the CE of this wick. So wicks will act as gaps. So you have to imagine a wick, the CE level of it, as a fair value gap. That's the way I'm envisioning it. It's something with repetition, because this took me a while to really start utilizing wicks and looking at them. I think the best way that you will get better at them is the daily time frame, especially looking at daily time frame wicks and just annotating the CE level of it, the 50%, and just seeing how price respects them. And you can use that on every single time frame. That's going to go to every time frame. What is an RTH gap? An RTH gap is the regular trading hour gap. So so this entire area here, if I was to toggle electronic trading hours to regular trading hours, you're going to see on this how there is a gap. So this entire area you don't see on the electronic trading hours, because electronic trading got introduced, I believe in, I'm not 100% correct, the 80s or the 90s. There used to just be regular trading hours where this is the close of yesterday and then they open up today. So if you toggle that on, there's a gap. So just picture it as a fair value gap. And price can trade into it, whether that's the 25 or 50%, and trade away from it. And you're not going to see that on electronic trading hours. So in here, I was utilizing that. It's not on the chart anymore, but I was utilizing that as basically if we drop down into it, I can use that as a long bias. You can also use it as, you know, completely filling it in, or a draw on liquidity, whatever it may be. So we had a really deep retracement in here. If you look at like a 5 minute, there's a small fair value gap, and we just basically reclaimed this discount in here. When you find time in your daily log, can you explain the new day opening gap significance? Yeah. I mean, new day opening gaps, new week opening gaps, RTH gaps, you're just utilizing them in confluence with whatever the price is doing. I mean, today, I couldn't utilize the new day opening gap, but we did utilize it off that news event driver, because we dug down into it and we displaced away from it. It's very much like a new week opening gap. You just don't extend it out in time throughout weeks and months like a new week opening gap. It's just in confluence. If we traded down into this region and I think we could tear off lower, and then there was a fair value gap inside of that, it's just an extra confluence. It's just having an extra padding basically to whatever your trade idea is. So we're dropping down into this 5 minute order block. We drop down into a discount again. So this fair value gap here, reclaimed. And what's to the left of us? Bullish order block. And if you also look at the 1 minute, I annotated this earlier, but it's not on the chart anymore. We drop down into this bullish breaker. So on the 1 minute time frame, you have a low, a high, a lower low, then a higher high. So we drop down into this discount and reject off of this bullish breaker. So you could have utilized that in any way you would have liked. So we have this inversion here. We got above it, utilizing it as support. We have this old SIBI. Extend that out in time. That'll also be treated as inversion. Which I'm going to make it a different color just because it's a little overlapping. Yes, Gabriel, I have. Mistake tilt got me. Yeah, that's all right, man. It's give yourself a little. I'm trying to find the word for it, but just don't be so harsh on yourself. It happens to all of us, especially with mistake tilt. It's ironic because with mistake tilt, you can get even more upset at your mistake tilt than, do you see how it double adds? You're upset at your mistake tilt that you made a mistake. So just be wary of that. Mistake tilt, injustice tilt, all of those things are very, very again, I'm trying to find the word, but they can affect you greatly. I mean, from here, nothing's telling me that this thing would want to drop off lower. And keeping narrative as your #1 priority is important. It's the reason why I was looking for longs. I wasn't trying to short today. It's because the higher time frame narrative is bullish. I'm not trying to pick a top in this market, especially when we're trading at all-time highs. So anytime you're just trading within a narrative, you're disregarding everything else. So all the shorts in here, I was deeming that lower probability. And this is what I used to do in my younger kind of stages, is I would grade certain setups in my head, or whether that was on a physical piece of paper, is I was grading a certain setup. I was either giving it a C, a B, an A, an F, and I was seeing like, okay, does this have a lot of confluences surrounding it? Does this match with the narrative, etc. So sometimes, especially trading on the 1 minute, I don't have time to do that. So what I'm doing it in my head. YM is really dropping off lower in here. So they're a little bit decoupled, meaning that they're not in sync with each other. ES is not in sync with the NQ, nor is it in sync with YM. So I'm going to put these back on. Really all I'm doing is just analyzing for the last 10 minutes. What I would do in terms of just for the sake of the stream is I'm going to be analyzing this macro. So from my time, this is Central Time, 9:50 to 10:10. We've taken out buy-side liquidity here. We have bearish S&T and YM's really dropping off lower. And anytime I mark things up, please don't take that as a signal to go long or short. If I enter in the market, I'm going to tell you and I'm going to show you. And I think a lot of you learned your lesson with ICT this week. Take your own trade ideas as the most important thing. Never take somebody else's blindly unless it completely agrees with whatever you're already seeing. And if you don't have enough experience to see something, then don't be trading. It's that simple. In these conditions, if I was forced to be in a box and I had to trade a gun to my head, I would say this is lower probability because I could see both sides right now. And B, I don't have a gun to my head, so I don't have to force anything. I use that term a lot because ICT does, but I also try to inverse it because a lot of you trade as if you have a gun to your head, and we don't. We don't have a gun to your head. Nobody's forcing you to take a trade. So you should feel at ease when you're trading. You should feel confident enough to enter into the market, not overconfident, but like today, I was confident enough to take this trade. I could see where price was going. It was clearly one side, and I wasn't forced into it. I wasn't trying to force anything. It was just easy because I could see where the draw was going. I could see that I could find my entry. My entry was there. But in here, if I was forced to take a trade, I would feel a lot of pressure. I'd be like, well, I could kind of see both sides. There's just not enough confluence there. There's not enough evidence. Yeah, Chase, I think yes. Again, if you're not looking at crosses and SMT and just the correlation between the three, it's very, very important, because if I can see that ES has a lot of sell side underneath it, YM is dropping off lower, so that may be the leader. That may push ES lower to take out the sell side, and in accordance, that would push NQ lower. How do I trade on a live account when I'm paper trading? I mean, the buttons are right next to each other, so I enter into my live account, and then I'll enter on paper trading so everybody can see it. I mean, if I get a worse entry on paper trading, it is what it is. My live account's more important. But I mean, if I have a monitor, you see my cursor. The live account is directly right to my left, and the button's right there. So I can click that one, and I can just click this one here. I would love a trade copier. And the reason I don't trade on TradingView with, like, let's say Tradeovate, because Tradeovate's had a lot of issues, and I've had a lot of issues with them, especially on TradingView with disconnections and connection errors. So I just elected to trade with Rhythmic and on Quant Tower, and so far I've had no issues with them. Yeah, I guess, Christian, that's another answer. I have 4 monitors, so I'm able to obviously do a lot more. I'm going to make this inversion. So these will both be minus inversions. So we have 2 inversion levels in here that we're kind of reacting off of. We've taken out buy side liquidity there. And there's a lot of sell side. So you see how ES is dropping off lower now, and it's following suit of YM, and now NQ is following suit. How long have I been a charter member? Since 2020. I've been trading his concepts probably close to 5 years. Had the same Tradeovate issues. Yeah, I mean, so many people have issues with Tradeovate, and it's the reason why I didn't elect to go with them. So we have sell side liquidity underneath here. We're inside of the end of silver bullet macro. So inside of this macro, I just want to see if there's any heavy displacement. Yes, if you're new here, I use Central Time. I don't use New York, just because I've accustomed myself to it. Thank you, Ozzy. Yes, I will be live tomorrow. I'm live every single day. Tradeovate is trash. Yeah, Danny, it's not fun. I know you've been using Quant Tower for a long time, way before I even knew what that was. It's a great platform. It's much like TradingView, to be honest. I mean, if they did a couple of things to it, I think it would be right up there with TradingView. And it's a built-in trade copier in and of itself. That's the reason why I chose it. Let's kind of pan out here. So you see how we have a remaining portion from this low of the RTH gap to that low there? There's still a portion of the RTH gap that is open. So if this thing decided to drop off lower, we could look to target the sell side liquidity underneath the lows there and target the RTH gap, the remaining portion of it. Full-time trader. Awesome, man. I love hearing new people tuning into the stream. If you guys can just like the video, subscribe, I'd appreciate it. And if you're just tuning in, I mean, I'm already done for the day, but I'm just sticking on here. I'm going to take this away. So we're inside of that macro. We took out buy-side liquidity here. Moved up into a premium SIBI up there, which we rejected off of and moved lower. Turned up into a premium SIBI. Dropped off lower. And then inversion for value gap there. So to me, if I was to be very confident in taking a short, it would need to break beneath this low in here. And then I'd be looking to target the sell side there. And then the pre-session sell side liquidity in here. So I'm going to draw this out over. If you look at my old annotations, even from last year, I used to have a vertical line on my chart all the time. Then I just kind of stopped doing that. But I do find it really clean. For my OCD, I like to have everything kind of in line, and I usually typically have all my annotations on just one time frame, or the time frame that's on. So in here, it's still 50-50. I couldn't make a decision. And yeah, I mean, this week's been difficult, to be honest with you. I mean, managed to get out of it profitable, but I think that Monday and Tuesday were very difficult. Even yesterday was a bit difficult to navigate. I think the PM session really had some good opportunities, but I wasn't trading it. And then today, it's been all right. It's been decent, obviously. And then we'll see what tomorrow brings as well. So we're about to close out the silver bullet. I mean, if you're only electing to trade the silver bullet, you can put your rules within the two macros that exist before and after the silver bullet. And that's basically your time window. And that's when you'll call it a day there. Macro adds speed to the trade, right? Yeah, and sometimes the macro can be stale and it can be lethargic depending on what's happened throughout the session of the day. And then sometimes the macro can speed up price and spool towards a certain draw in liquidity. So it's just something that it's, again, everything is a confluence. Nothing's ever 100% guaranteed with these concepts. Just because you're in a macro doesn't mean that price is going to move. It's just something that's an added confluence. If you see an entry pattern and you like what's happening, and then you're inside of the macro, then it's an added confluence. Same with SMT. SMT is just a confluence to help you to build your trade idea on whatever is already there. If you look at ES, we're nearing the sell side liquidity pool. I would elect to believe that ES is going to want to run out the sell side at 49.10 and dig into the discount inefficiencies beneath price. So that's the reason why I'd be electing to look for lower NQ. And I'll just pull this over. So you can see how ES has relative equal lows in here. YM has already moved off lower, right? So that's basically leading the pack of them three. So these two, if they are truly bearish, they would get into sync with it. Most of the time, one is leading the three, and you have to pay attention to that and see where they're in sync with. So I think with ES having the sell side, you would want to run that out, NQ would want to drop lower, and YM would continue to drop off lower in here. And that's how you're utilizing all three of them. Even if you're not paying attention to SMT, you're just looking at the correlation between the three, and you're seeing where they all are at and where their liquidity is at and their inefficiencies. And for me, if I was, again, a gun in my head and I had to trade this, I'd be waiting for a shift underneath this low here, just to be certain that we'd want to run lower, rather than me trying to guess in here. Let me move this line, because I think there's an inefficiency there. A little small fair value gap there. Drop down to a 5-minute here. So just looking at the 5-minute order flow. Bearish order block here. Moved up into the mean threshold. Small fair value gap underneath it. Mean threshold of this bearish order block as well. And if we can close into about 3 minutes underneath this up close candle, that would also be a bearish order block. So I'm reading the 5-minute order flow. I'm seeing what it's doing, what it's respecting, because that's the parent to the 1 minute. So I have to be analyzing that and seeing what it's doing. I haven't gone on Twitter today. I think somebody mentioned earlier ICT was tweeting a bunch. So let me see. How many of you from Tanya's stream? I believe that apparently she sent a lot of you over here, which I appreciate her. I would love to do a collaboration with her and do some type of stream together if we could make that work. I have to message her. I'm 7 months out watching the playlist of ICT, and so far different terms are familiar to me but not consistent. Planning rewatch. Yeah, I mean that's just time and experience and just digging into the charts and into the concepts. I mean, to be honest with you, a lot of people are underestimating the amount of time that you need to spend with these concepts. To me, you need at least 2 full years to really get a good grasp of these concepts and have a good understanding of them. ICT answer to Andrew Tate. I saw that yesterday. Somebody made a donation to Andrew Tate's stream, and I thought that was so funny, man. I thought that was hilarious. Because I don't think those dudes have any idea what ICT is. Do I use quarter theory? No, I do not. But ICT talked about this yesterday on his live stream. We use quarter theory in a sense, in terms of like a fair value gap. You can still mark up a fair value gap in quadrants, where you're looking at the discount of the fair value gap. You could look at the 75% of it, you could look at the 50% of it, you could look at the 25% of it, and you could look at the premium, which is 0 of it. So in a sense, that's like quarter theory. When I first started trading, I was trading retail concepts, quotations retail, like support and resistance, and I read quarters theory, I read the whole book, used it, but obviously I don't use that anymore. She's doing one with Patrick tomorrow. That's cool. 2 years of real work on the charts. Yeah, I mean, to be honest, I'm gonna be realistic, man. Unless you're an exception to the rule, I'm gonna say 4 years, maybe 5. I'm just being brutally honest, because it took me that long, and I'm somebody who works extremely hard at this. I mean, I've put in hours and hours of work to this craft, and it's taken me. I mean, I'm on 6 years of doing this now, and now it's starting to hit my stride. So I don't want to put unrealistic expectations, because some people will hear a year or 2 years, and then by the time that rolls around, they haven't seen any profits. They're not consistent, and they start wondering, well, am I not meant for this? Am I not, going to be successful? I mean, realistically, look at this as a bachelor's degree, if not a doctorate's degree. Like, really really put a long time frame on this. If not, don't even put a time frame on it. Don't put a time frame on when you should arrive, because everybody is different when they should arrive to their own understanding of what consistent profitability looks like. Everybody's going to be different. Everybody's unique. But if you're believing that in 6 months or a year you're going to be consistently profitable, even 2 years, even 3 years, I find that very just a skewed way of looking at it. I mean, if you're going into a profession that makes you potentially unlimited amount of money, I mean, it's going to take you a long time to understand it. There's a reason why 90% of people fail at it, because A, they're taught the wrong concepts, and B, they can't control themselves. Yeah, Roger. I'm pretty aware. He's been inside of our private group today. Just let me pop over. He's tweeting a lot, or not tweeting, in our private group. Somebody said something about, it was hilarious because Andrew Tate is selling ICT content without telling that it's ICT, it's a person. So, really? Damn. I wonder if ICT tweeted at Andrew Tate personally. That would be hilarious. That would be something I'd want to see. Yeah, 2 years of learning. Yeah, bro. I mean, those years of being either just under break even where I was losing, or I got to a point where I was break even. And break even, believe it or not, it feels like it sucks, man. It's like I'm right there, but I can't get to it. It's the best place you can be at. That's progression. You're actually seeing something, because all you have to do is make a few adjustments, a few tweaks, and that may not be right away. That may take months to do, but you just need to make a few adjustments in your own strategy to get you up and above that starting balance, because you probably are getting a little bit below it, a little bit above your starting equity, and you keep kind of going back and forth. And if you do good journaling, you can figure out what you're kind of consistently keep doing wrong. I think it's also down to the strategy, and I think the issue with SMP and ICT is yeah, I mean, the issue is yourself. Like, it's never about the strategy. I just particularly love these concepts because they work. But if the user does not know how to use the concepts, nor do they know how to manage themselves, they're going to destroy themselves. It doesn't matter what you use. I guarantee you there's people out there using harmonic patterns, trend lines, support and resistance that would outtrade 90% of ICT traders. I mean, because they know how to control themselves. So just because these concepts and we know the algorithm, it doesn't mean shit. You have to be able to control yourself. It's the hardest part of this. It's the reason why if you're ever out consistently on these live streams, I consistently talk about psychology and controlling yourself. That's all I talk about. I mean, that's also a flawed way of, Tom, because I used to think that as well, that I'm going to have this one breakthrough moment, it's this one thing and this one light bulb, and it's going to solve everything. Harsh reality, that never comes. You're going to have multiple light bulb moments. You're going to have multiple breakthrough moments where you start realizing these things. And you're not just going to poof out of thin air, be consistently profitable. That doesn't happen. You slowly build that up. You slowly callous your mind into that. It's never just this one moment, this 1 week, this one trade, this 1 month that you just immediately you're out of it. You're done. You're never going to lose again, and you're set for life. That doesn't work that way. And I'm trying to teach from a standpoint of like, just truly sit down and think to yourself, what does consistently profitability look like? What is the reality of it? Well, most of the time it's probably taking a good amount of losses. It's you protecting your capital, your risk management, just controlling yourself a lot, and building yourself out of drawdown for a good portion of the year sometimes. Sometimes you're in drawdown for a month or 2 months or a couple weeks, and you have to build yourself out of that. That's what consistent profitability looks like. It's not just winning every single week. That's not what consistent profitability looks like. Sometimes you lose 2-3 weeks out of the month, and then your last week of the month you do exceptionally well. That's the reality of what consistent profitability looks like. I want you guys to actually think about that. I don't think anybody thinks about what it looks like because nobody talks about it. It's just always winning. You're always winning and you never lose, and that's what it looks like. And that's so false. It's unbelievable. Thoughts on ICT's logo sequence? I don't have an opinion on it. People try to figure out the enigma and they try to figure out things. I don't see a reason to do so. I'm going to answer one last question. I'm done here. How does that single candle help you? I utilize it just to reference back to it if I ever get stuck on laser focus on lower time frames. It can help me draw my focus back out to the daily time frame. Especially with the daily time frame candlestick, I'm looking at open, high, low, and close, power of 3. So if I'm looking for lower prices that day, then I'm looking at the high of the day and I'm saying, all right, are we trading away from that high of the day? And can I short and can it move away from the high of the day? So that's how I utilize it. I utilize it in a bunch of ways. That's going to be it for today. I'm not going to go on a ramble and go on too long. I hope you guys enjoyed. I appreciate all the new viewers. Make sure to subscribe, like the video, etc. I'll be live tomorrow, 15 minutes before New York Open. So, until tomorrow, good luck and good trading, everybody.